Joining us now is Torsten Slok, chief economist at Apollo Global Management, and CNBC senior economics reporter Steve Leisman. Welcome to you both. Torsten, we'll start with you. People don't like these kinds of data points because they feel too fatalistic, and they're like, come on, we're not, But why do you think, fundamentally speaking, we're about to see a major change of tune here? Maybe not tomorrow, but in the months to come.
Because I think that things are actually better than the market is appreciating at the moment. The labor market in particular is very strong, and we have just not seen any signs of weakness. So for every month where inflation continues to tick lower and the economy is still doing well, I still think that that's a very important sign that if we get inflation by the middle of this year, as inflation swaps are trading at the moment to the Fed's target of 2%, well, that means that we are just really a few months away from the market beginning to say, well, this inflation risk that we worried so much about last year is just no longer the significant risk that we thought it was.
Yeah, Steve, all eyes on you.
I think
Chair Powell.
I think the market is exactly where Torsten says it's going. The question is whether or not the Fed is there.
Exactly.
And I think what's been interesting is that chart shows me, if they have that chart again, it's measuring Fed speak. The Fed has not changed its rhetoric despite the data changing and the market recognizing this. And that's why I also came with bullet points, as Torsten did. You're not going to be alone. I have three outcomes of this thing. And the first one, if you look at the first bullet point, the hawkish one, is the Fed fights against this move in the market. They use more rhetoric and try to tighten financial conditions.
Which is kind of what people worry is going to happen tomorrow.
That's one of the risks of this meeting here. And the other thing, I thought I'd turn this thing off here. The second thing is this neutral idea, which is you go your way, I'll go mine. We'll figure out in the end who's right here. And then the least likely scenario is this dovish one. Maybe the Fed says maybe the market has a point on inflation and economic outlook. So we're waiting for Powell and company to get this idea that Torsten's talking about, which to me the market has somewhat embraced.
And to paraphrase what Steve is saying, Torsten, and another commentator this morning said, we all think the Fed will be cutting rates. The Fed itself just doesn't know it yet. I mean, their predictive track record, Torsten, is quite poor. Look at last year, exact same meeting. They thought rates were going to 1% by the end of the year. They ended up having to jack them over 4%.
Absolutely no. They have the luxury that they don't need to have a strong view on what will happen in 6 or 12 months' time, but we do need to have that in both in equities and in bonds. So from that perspective, the Fed can more say, we just know one thing today, and that is inflation at 6.5% is too high relative to our 2% target. So that's why it makes sense that the Fed is having this hawkish communication. The only issue now, of course, is that if we do have a soft landing, and if the labor market continues to hold up well, if we have had still more labor hoarding and companies holding on to workers, even in the face of this slowdown, we could go through the next several months with a relatively soft landing without that sharp correction that we're also worried about.
And it's worth highlighting what Torsten is saying, Steve, because he's basically saying we're in a production recession, not an employment recession. The only asterisk to this being, has that ever happened before? Normally, it just takes a while for it to hit the employment part. That's the last place it shows up.
So if I could respond to what Torsten is saying without mocking him, but only say that the Fed is mocking this idea, which they call the immaculate disinflation. And the Fed does not believe this. And I don't mean to say that I don't believe it or not, but the idea of what is immaculate disinflation? It is inflation coming down without much pain at all in the job market or without much decline in GDP. So the Fed does not believe this is possible.
Which is fascinating, because if they don't believe that, they should be the ones starting to pause or cut rates.